Okay, so good morning once again, everyone. No, so let us continue with part two of our um, discussion series for stockholders equity. No, so um, previously or the first part of this video discussion series tackled everything about some of the basic concepts of a corporation. No, though not all um, not all was discussed, but somehow we now have a clear picture on what is a corporation now as a business entity. And we also discuss some basic concepts on capital stocks, no? And what is the accounting treatment if there are issuances of capital stock. Okay? So let us begin with part 2, no? So um to start, let us discuss first, no? Or in in um in accounting for stockholders equity, okay, it is also very important to note the concept of legal capital. Okay, so what is this legal capital? Okay, legal capital, okay, is the portion, okay, is the portion of the paid-in capital which cannot be returned to the stockholder. So meaning, um, unlike in other types of forms of business wherein withdrawals are allowed, okay, withdrawals are allowed, in a corporate setting, okay, there should be no withdrawals. Klaro yun siya ha? There should be no withdrawals. So meaning, the concept of legal capital, this is, kumbaga, um, the assets or this is, kumbaga, the assets that you have put or the equivalent capital interest of your asset put into the corporation as a stockholder, which you, as a stockholder, cannot withdraw this. Okay, cannot withdraw this. That particular capital interest, that is your legal capital. Okay? That is your legal capital. Now, why is this legal capital cannot be withdrawn or cannot be distributed to stockholders? Because of the concept of trust fund doctrine. Okay? The trust fund doctrine dictates us na because as stockholders, you are or you have accepted the fact that you together with all other stockholders have pooled your assets in order for the corporation to operate. Okay? It is rightfully so na dapat yung binigay nyo ng mga asset, which is, kumbaga, equivalent to your capital interest in the corporation should not be taken out from the corporation in order for that particular corporation to continuously operate without disruption as to capital. Okay? That is the trust fund doctrine. Nagbigay ka ng asset, equivalent to your capital interest, hindi mo muna yan siya pwede kunin kasi nga, kung i-allow natin yan siya, okay, kung i-allow natin yan siya, baka ma-disrupt yung operation ng corporation because of capital issues. Okay? That is the trust fund doctrine. However, this limitation is only applicable during the life of the corporation. Okay, during the life of the corporation. That is why it is a very important concept to know na under the trust fund doctrine, this legal capital can only be taken out from the corporation once the corporation is dissolved, no? Is dissolved. Dati, based on the old law, Batas Pambansa bilang 68, yun nga, if a certain corporation decides to liquidate after its original term of 50 years, then this legal capital would be distributed to the existing stockholders. However, under the revised Corporation Code of the Philippines, no, Republic Act 11232, kasi nga perpetual na yung life ng corporation unless the corporation decides to dissolve or the stockholders with a majority vote decided to dissolve or liquidate the corporation, then this legal capital will be distributed. Okay? So the point is, legal capital cannot be distributed to the stockholders because of the trust fund doctrine, no? So, actually, ang point lang natin dito with this concept of legal capital is, how do we know or how do we compute for what is legal capital, no? There are 2 points that we need to know. Okay, there are 2 points that we need to know. Number 1, if the capital stock of the corporation is is with par value, okay, is with par value, the legal capital, okay, the legal capital is only equivalent to the par value. Klaro yun siya, di ba? Kasi nga, if we remember, we can issue capital stock above its above its par value, di ba? Above its par value. So, in regard to that particular issuance above its par value rather, the legal capital there is only equivalent to the par value. So that means that if there is share premium, then that is not part of the legal capital. Okay, that is not part of the legal capital. However, if the case is no par value capital stock or no par value share capital, okay? The legal capital, okay, is equivalent to all consideration received. So, nakita nyo ang difference, no? All consideration received. So, meaning, kahit na may issuance tayo above its stated value, kasi nga, no par value, so that means yung gagamitin is ang stated value, okay? The legal capital is all consideration received. So that is yung difference, no? Dito kasi medyo nagkakatalo tayo, especially if we encounter problems na requiring us to compute the legal capital. Tapos, yun nga, very basic. Pag sinabi kasi na with par value, alam na natin na yung legal capital doon na part of the paid up capital, okay, of the paid up capital is equivalent to the par. Problem lang is what if no par value yung shares, no? Hindi siya equivalent to just the stated value, but rather to all the consideration received. Okay? Klaro yun siya. So that is the concept of legal capital and trust fund doctrine. Okay? So next, Another point that we need to consider, okay, when it comes to corporation, is yung mga transactions encountered during issuances, di ba? And part of these transactions or add-on transactions that will be encountered during issuances of capital stock are those transactions that would create um, issuance costs. Okay, that would create issuance costs. Now, these issuance costs, okay, ito yung mga expenses directly attributable with the capital stock issue. Kumbaga, kailangan talaga to siya na gagastusin natin para ma-perfect yung capital stock issuance transaction. Okay? Kailangan siya. So, issuance costs can be encountered in two scenario. Okay? Number one dyan is during incorporation, and number two, new issuances. Okay? Now, the issuance costs pertaining to cost in issuing capital stock or share capital during incorporation, ito yung tinatawag natin na organization cost. Okay? While for new issuances, basically, ito yung mga general share issuance cost. Okay? Share issuance cost. Now, if the issuance cost is incurred during incorporation, during the establishment of the corporation, so it is an organization cost, no? The treatment for issuance cost is outright expense. Tandaan natin yan na outright expense. Okay? So again, no, magkamalito tayo, what are these type of issuance costs? Basically, ito yung mga legal fees required during issuances, mga accountant's fee, no? All attributable costs directly related to share issuances. So, if it relates to incorporation, organization cost siya, outright expense. Okay? However, if that issuance cost pertains to new issuances, or meaning yung mga additional issuances of capital stock, okay, after incorporation, you have to remember this kasi medyo nakakalito to na concept. This is a deduction to share premium. Kumbaga, the point is, share issuance cost is to be deducted to the stockholders' equity, no? To be deducted to the stockholders' equity. If the share premium, okay, if the share premium is not sufficient, okay, is not sufficient for if applied with the share issuance cost, then the second option is to deduct it to your retained earnings. Okay, you have to remember that deduction to share premium, if it is not sufficient, then it is a deduction to your retained earnings. Okay? Now, in addition to this type of cost, we also have this concept of joint costs. Okay? These joint costs Okay? These joint costs, basically, may encounter lang natin ito if, okay, if the corporation is into um, or is entering into public listing, okay? Entering into public listing and at the same time, okay, and at the same time, there are new issuance of capital stock. Kaya tinatawag siya na joint cost. No? There are two transactions that is happening which relate to kumbaga, issuances of capital stock. Number one, yung listing to become public, and number two, there are new issuances of capital stock. What is this public listing? No? Brief background lang, okay? In general, no, if a corporation is established, okay, established. Although meron tayong mga stockholders, in general, they are treated as non-public. Meaning, pag sinabi po natin na non-public, the shares are not traded, okay, are not sold in the open market. Okay? Yung open market na sinasabi natin dyan is yung Philippine Stock Exchange in the Philippine setting, okay? Or the PSE. Itong PSE or the Philippine Stock Exchange, isipin na lang natin na para itong palengke, kaya nga tinatawag siya na market, no? Stock market, palengke, na ang binibenta dito are all shares of stocks. That is why, pag ang corporation is nalista sa PSE or Philippine Stock Exchange, they are generally described as being public. Kasi nga, yung shares of stocks na nila is now open to the public for bidding or for sale. Okay? Pag non-public, although pwede naman siya, but then again, hindi siya available to the general public. Okay? To the general public. So that is what we meant by public listing. Okay? So the point is, if sana, kung public listing lang, walang new issuances, okay? Walang new issuances. The cost entailed in publicly listing a corporation, okay, that is outright expense. Kumbaga, kung iisipin natin, para lang na nagbenta tayo ng product, tapos any cost incurred in selling that particular product is basically either a marketing expense or other type of expense, di ba? So, outright expense siya. Nito, if we are to publicly list the corporation, then obviously, any expense entailed in publicly listing that particular corporation, that is outright expense. No? Medyo magkakaproblema lang talaga if at the same time may public listing and then mayroong new issuance. Kasi nga, if we could go back, if there are additional issuance, ano yung ginagawa natin? Deduction to share premium. Okay? So, any cost na if existing tong dalawang transaction na to and then there are if there are costs which is common to both, meaning nagamit yung cost sa public listing and then nagamit yung cost sa new issuance, then that is our joint cost. Okay, that is our joint cost. So, how are we going to um, apply this joint cost? Okay, very basic. We need to allocate. Okay, we need to allocate. So how are we going to allocate this? Okay, how are we going to allocate? We will obviously use the ratio. Okay, we will use the ratio. The ratio of, okay, the ratio of your existing shares, okay, which are, okay, which are to be listed, and your new shares to be listed. Ratio nilang dalawa. So example, no? Example, we have this joint cost. Okay, we have this joint cost. Let's say amounting to 500,000 joint cost. Okay? And then, um, prior to issuance of new capital stock, okay, prior to issuance of new capital stock, the existing shares, let's say 500,000 shares. Existing. Okay? Then, with the listing, okay, with the listing of the part of this of the corporation, we also issued additional shares amounting to 200,000 shares. Okay? Shares, new issuance. So, our main point is to allocate this joint cost of 500,000. So, how are we going to allocate it? Again, ratio 500 plus 200,000, that is 700,000. So, the ratio is 500 over 700, then 200 over 700, multiplied by the joint cost of 500,000. Okay? So, we are to compute that 500 divided by, sorry, 500 divided by 700 multiplied by 500,000. So, let us just round this off, no? So, that would be 357,143. The next allocation, that is 200 divided by 700 multiplied by 500,000. So that is 142,857. So a total of 500,000 joint cost. Now, okay. So, this amount ngayon, which is applicable to your existing shares, okay? Existing shares, this will be your listing fee, which is outright expense. Okay, which is outright expense. While this amount applicable to your new shares of 200,000, this will be your deduction to share premium. Or if the share premium of this particular issuance is not sufficient, then deduct it to your retained earnings. So how are we going to journalize it? Example, if we encounter this particular problem, no? We just simply debit um, debit your share premium representing the deduction to your share premium amounting to 142,857. Then debit again the outright expense, which is the stock listing fee amounting to 357,143. Then credit cash for the outflow of cash for that particular joint cost na 500,000. So that is your entry. Again, no, if the share premium is not sufficient, then we will have a debit to retained earnings. Okay, we will have a debit to retained earnings. So that is joint costs. Okay, so that is joint costs. Okay. Now, another concept that we need to remember or to know when it comes to corporation, okay, is itong tinatawag natin na delinquent subscription. Okay, delinquent subscription. Delinquent subscription, okay, basically, intindihin natin ito yung mga na-subscribe na mga capital stock but still unpaid. So meaning may order pero hindi pa nabayaran. So obviously, this is still a subscription receivable. And that, tinawag siya na delinquent kasi nga hindi na siya mababayaran ng nag-order. Okay? Hindi na siya mababayaran ng nag-order. So the point is, actually, yung problem lang talaga dito, pag delinquent subscription is, kasi nga, ang mangyayari dito, pag may delinquent subscription, ang ginagawa is, pinabibid ito ulit. Okay? It will be applied for bidding for prospected or for prospective stockholders na naman na magsasubscribe dito ulit. Okay? Bidding. The bidding here would, or basically the amount to be bid dito is, yun nga, yung subscription price, or basically the subscription price here, okay, would include all the costs entailed, okay, in, or all the costs attributable in regard to the delinquent subscription. So, hindi lang yung original price, but rather, including na yon if may mga additional costs na na-incur tayo when it comes to yung, like for example, yung mga legal fees, no? When it comes to delinquent subscription, okay? So, lahat na yun siya, the cost. Now, that particular amount, no, that the cost, the additional cost plus the original price or the original subscribed price nito, that will now form part to your new subscription price for these delinquent shares. Okay? And now the question is, kanino natin to siya i-award? Okay? Kanino natin ito siya i-award? Obviously, like in every normal bidding, sa highest bidder. Okay? Sa highest bidder. Now, Sino ang highest bidder natin? The definition of the highest bidder is ganito. Hindi lang siya yung willing magbayad ng mataas na presyo. Okay? Kasi yun, pag sinabi kasi natin or if we talk about the highest bidder, the first thing that would come to our mind is basically um the person who is willing to pay the subscription price, okay? Willing to pay the subscription price um with the lowest number of shares. So, siya yung highest bidder, no? We have to remember that, no? Kasi nga, yun nga, ang idea kasi natin, most of the time, pag sinabi kasi na highest bidder, always the person who is willing to pay the highest price, no? This time, the highest bidder that we are talking here is basically the person who is willing to pay the subscription price with the lowest number of shares. So, siya yung highest bidder. Okay? So now, so next concept natin dito na dapat i-discuss din is the concept of these types of preference shares. Okay? So, di ba, alam naman natin na there are in general two types of capital stock, di ba? Meron tayong ordinary share capital or the common stock, and we have the preference share capital or the preferred stock, no? So, these preference shares or this preferred stock, okay, we have also these subtypes, no? We have callable preference share, okay? Then we have this redeemable preference share, and we have also this convertible preference share. Okay, we have this convertible preference share. Okay, now, a callable preference share, okay, a callable preference share is the type of preference share wherein anytime at the option of the corporation or the issuing entity, no? Yung nag-issue ng capital stock, he can call or it can call, okay? It can call for the redemption of this preference share. Meaning, pag sinabi natin na redemption of this preference share, i-cancel yung preferred share, and then kumbaga, isasauli na sa stockholder ng preference share yung capital niya, okay? Yung capital niya plus any income if applicable. Okay? So that is basically what we call as that is calling your preference share, no? So if we are to understand that particular or if we are to easily understand that concept, itong callable preference share, ang may control nito is the corporation. Okay? Is the corporation. That is why, no? Or why corporation yung may control? Kasi nga, yung option to call the preferred share is in the hands of the corporation or the issuing entity. Okay? That is the reason why this preferring share is to be presented under your equity section. Equity part pa rin siya kasi nga yung may control is yung corporation mismo. Okay? A redeemable preferring share, okay? A redeemable preferring share is somewhat same concept with a callable preferring share. However, okay? However, yung may option, okay? Yung option is now at the hands of the stockholder or most precisely yung holder of the preferred share. Sa kanya yung option na i-redeem. Okay? I-redeem. Or, okay? Or, at a specified date, okay? Or at a specified date per agreement. So, kumbaga, if we are to look at this statement, okay, if we are to look at this statement, kumbaga, wala sa corporation yung control nito, no? That is the reason why this redeemable preferring share is not an equity. Okay? This is not an equity, but rather this is a liability. Okay? Kumbaga, although in form, para siyang capital stock, but in substance, yun nga, utang. Kasi at a specified date, kaya at a specified date, para kang may utang na may maturity date. Okay? It is a liability. Okay? It is a liability. Depende na ngayon kung kailan yung specified date on whether it is a current or non-current liability. Okay? So, next concept is itong tinatawag natin na convertible preference share. So, itong convertible preference share, okay, ito yung mga preference share na may option, okay? May option yung holder nito or yung stockholder ng preference share na at a specified date, okay? At a specified date, okay? This particular preference share can be converted into ordinary shares. So, that particular stockholder has the option to redeem or to convert, no? To convert. That is why ang presentation nito, pag sinabi natin na convertible preferring share, this is still your equity. Okay? So, that is the three types of preferring share, no? Later on, no, during this discussion series, we will have examples, no? We will have examples that will show how do we treat this, how are we going to treat this in accounting, all these concepts, no? So what is important now is just for us to have a background on the concept or on the kumbaga learning on what is basically these items affecting the stockholders' equity. Okay? So, yun, yung preference share. Okay? Next concept that we need to understand, the concept of treasury shares. Okay? The concept of treasury shares. So, what is this treasury shares? Okay? What is this treasury shares? Um, treasury shares, okay? Treasury shares. Kumbaga, these are your capital stock. Okay? These are your capital stock issued. So, nasa kamay na ng stockholder. But, subsequently, reacquired by the corporation. Okay? Bakit nangyayari ito? There are many reasons, no? Why the corporation is kumbaga having or resorts to treasury shares. Example dyan is yun nga, what if there is a delinquent subscription? Kumbaga, merong subscription, but then, hindi na fully paid. May partial payment, pero hindi fully paid. So, kailangan may mababalik sa'yo. So, that is one treasury share. Okay? So, the point is, no, this is legally acceptable. No? This is legally acceptable. Itong mga treasury shares, issued but subsequently reacquired. Now, one thing that we need to note here when it comes to treasury shares is that pag meron tayong treasury share, there should be a subsequent appropriation, okay, of retained earnings, which is that appropriation should be equivalent to the cost of treasury share. The point is, if we acquire a treasury share, okay, it goes na dapat the acquisition of this particular treasury share should have a backup retained earnings. And that particular retained earnings should be appropriated, okay, na dapat hindi yun siya magalaw kasi nga it supports your acquisition of treasury share. Okay, your acquisition of treasury shares. Why? Again, because of trust fund doctrine. We cannot, okay, allow, okay, withdrawals of capital stock. Kasi nga kung isipin natin, pag na-issue na yan siya, tapos we subsequently reacquire, di ba parang binayaran natin yung original stockholder? Di ba? That is correct. Bawal yun. Di ba? Kasi nga, because of the trust fund doctrine, legal capital should be preserved. Okay? Legal capital should be preserved. Now, but why is it allowed? Itong treasury share. Okay, why is it allowed? It is only allowed, okay? It is only allowed if there is enough retained earnings to support your, okay, to support your treasury share. Ang mangyayari niyan, o nga, tama, naibigay natin yun, so parang may withdrawal, pero in exchange, we are to capitalize our retained earnings. Okay? We are to capitalize our retained earnings. So that is why, kung wala kang retained earnings, you cannot acquire or purchase your a treasury share. And it is an important concept na yung appropriation is equivalent to your cost. And by the way, pag sinabi po natin appropriation, ito yung pag-restrict sa retained earnings na dapat hindi yun siya magalaw. Okay? Hindi na siya dapat galawin. Meaning may nakaset aside na tayo dyan. Okay? So that is appropriation. So, yun yung treasury share, no? So, in accounting for treasury shares, okay, in accounting for treasury shares, always remember this kasi ito, medyo nakakalito din ito. We will account treasury shares at cost. Always at cost. Okay? Always at cost. So if we acquire treasury share, the entry would be basically just to debit your treasury share or treasury stock, okay? Credit cash for the cash payment equivalent to cost, okay? At cost, okay? Always at cost, okay? So, klaro yun siya. Next, no, if you may notice with this entry, yung ginawa lang natin dito is acquisition of treasury share. Baka malito kayo. Anong mangyayari doon sa capital stock na na-issue natin? Di ba? Kasi yung ito lang yung entry, anong mangyayari doon sa capital stock? Remained as is. Klaro yun siya? That would remain as is. Okay? Why? Because yun nga, these treasury shares, okay, ang mangyayari kasi nito is that after acquiring this, there are two transactions that could occur after. Number one, this treasury share can be reissued. Okay? It can be reissued. Or the second, this treasury share will be retired. Okay? This treasury share will be retired. Okay? Now, if this treasury share is reissued, the entry would be simply, kumbaga, this entry will just be reversed. So that is debit cash, credit, treasury shares. If the reissue is equal to cost. Okay, if the reissue is equal to cost. Now, if the reissue is more than the cost, meaning mas mataas, okay, same pa rin, debit tayo ng cash equivalent to the reissue price, credit your treasury share, reverse lang ito, okay, then you will now credit your share premium treasury shares. So, yun lang yun. Okay, yun lang yun. Madali lang, di ba? No? Now, if the treasury shares ngayon is reissue, okay, below cost, okay, so, obviously, yung pera na matatanggap natin is below the cost of your treasury share. Okay? So, how do we account for it? Obviously, wala na yan siyang share premium, no? So, the standard requires, okay, the difference between the cost and the consideration received or the subscription price, okay, or the amount below the cost should be debited to your retained earnings. Okay? should be debited to your retained earnings. So the point is, if ganun yung situation, below cost yung reissuance, okay, we would debit cash equivalent to your issuance price. But we will debit retained earnings which is equivalent to your, kumbaga, loss on reissuance. Okay, loss on reissuance. Credit treasury shares. Okay, credit treasury shares. So, that is the general scenario for treasury shares, no? Now, what if there is, kumbaga, retirement? Okay? What happens during retirement? Okay? Now, if, again, pag retirement, walang reissuance, kumbaga, fully retired yung treasury shares, that means we also need to cancel out the applicable capital stock for that. Okay? We need to cancel out the applicable capital stock for that. So the point is, if there is a retirement, kumbaga, the basic entry for this, okay, the basic entry would be to debit your capital stock or share capital. So whether yung treasury share mo ba is a common share or preferred share, depende. Basta capital stock. You should debit that. Okay, you should debit that. Then, credit your treasury share. That is the general entry niyan, no? Yan yung, kumbaga, guiding concept natin. Okay? That is our guiding concept, no? And we have to always remember, okay? We have to always remember that capital stock should be debited at par value or stated value. Always remember that, no? In stockholders equity exercises or analysis, especially during journal entry, pag yung account title ginamit is capital stock, whether it is a common share or preferred share, okay? Always use the amount equivalent to par value or stated value. Yun talaga, para hindi tayo malito. Basta capital stock, whether it will be a debit or a credit, always the par value or stated value. Klaro yun siya, ha? So, in this particular scenario, no, ito yung general guiding concept natin, no? Kasi nga, retirement, cancel the capital stock, that is why i-debit natin, then cancel the treasury share, that is why kini-credit natin. Di ba? Now, if the cost, okay, if the cost of the treasury share, okay, if the cost of the treasury share is higher than the par value or stated value, the credit, obviously, meron tayong kulang sa credit or obviously there is an excess, no? That is to be charged to share premium. Okay? Klaro yun siya. Kumbaga, yung gain dyan, okay, yung gain dyan is credited to share premium. However, if the retirement, okay, at below or cost of treasury share is kumbaga higher than par or stated value, okay? If it is higher than par or stated value, the difference is debited, okay, in this particular order of priority. Okay, in this particular order of priority. Number one, we will charge it first to share premium from original issuance. Okay, from original issuance of the stock. Okay, share premium from the original issuance of the stock. Yung share premium bago pa natin siya ni re-acquire. Okay, share premium bago pa yung re-acquisition. Okay. Pag nagkulang yon, okay, pag nagkulang yon, charge it to share premium from Treasury Shares. If mayroon. No? Kung meron tayong mga existing na mga share premium to Treasury Shares. Pag hindi pa rin yan siya sufficient, credit now to retain earnings. Okay? Credit now to retain earnings. So the point is, if we are to retire this, na yung treasury share is higher than the par value, then, kumbaga, sige, magbigay na lang tayo ng example, no? Let's say, no, na meron tayong 10,000 shares, okay? Which is a treasury share. Okay? Then, let's say yung par value nito, for this particular share, let's say 100 per share. The par value is 100 per share. Then, wait, let's check muna the amount. 10,000 times 100. So, the total par value of this is 1 million, no? So, let's say, the cost of this treasury share, okay? Let's say this is 1,200,000. Okay? 1,200,000. So the point is, if we are to make our general entry for this, no? We'll debit capital stock. Okay? Again, always at par. That is 1 million. Then we will credit treasury shares or treasury stock at 1,200,000. Obviously, there is a difference of 200,000, di ba? So let's say, as an additional data for this particular problem, let's say we have share premium original issuance of, let's say, 100,000. Okay? Then we have retained earnings of, let's say, 500,000. So how are we going to account for this? No? So again, first priority natin, share premium original issuance kung meron. Kung kulang pa, share premium treasury stock. Then kung kulang pa din, retained earnings na. So in this particular example, meron tayong share premium original issuance na 100,000 lang. However, yung amount na kailangan natin i-cope is the difference between the two, which is 200,000. So how are we going to account for it? Let's charge it first to share premium original issuance at 100,000 only kasi nga 100,000 lang yun. Okay? So, then going back, no? Kulang yung 100,000 to cope up with the 200,000 na kumbaga loss natin, di ba, on retirement of this treasury share. So, saan natin yun kukunin? Sa retained earnings. Okay? Kung meron sanang share premium with treasury share, yun yung uunahin. Pero in this particular example, wala siya. So, diretso tayo sa retained earnings up to the amount na kulang lang. Okay? So, that is the concept of treasury shares. Okay? That is the concept of treasury shares. Now, another thing that we need to consider, when it comes to stockholders' equity is itong tinatawag natin na recapitalization. Okay, recapitalization. So, ano ba tong recapitalization? Okay, ano tong recapitalization? So, recapitalization, basically, this is just change in the structure of your equity without affecting the total value of the equity. Okay? Kumbaga, that is in general, no? That is recapitalization. Let me correct, no? Some recapitalization may affect the value, okay? And some may not. Okay? Some may not. The point is, this is changes in the structure of your equity. That is recapitalization. Okay? Recapitalization. But majority of this, okay, in general, hindi talaga siya makaka-apekto sa total value. It will only affect the structure. Okay? So, itong recapitalization, we have 6, no? We have change from par to no par. Okay? Second, yung kabaliktaran from no par to par. Then, reduction of par value. Okay? Next, we have reduction of stated value. Then we have split up and split down. Okay? We have split up and split down. Okay, so let's begin with from par to no par. Okay, anong mangyari dito na recapitalization from par to no par? Okay? Kumbaga, in essence lang, the concept is, we are to cancel out the capital stock issued with par value, then reissue capital stock with no par value. So that is the point to all of this, no? Cancel the existing with par, then reissue capital stock with no par. So, the point here, okay, in encountering this transaction, okay, in encountering this type of transaction, we termed it na there is the capital stock is cancelled, no? So, the point is, we need to cancel, number 1, the par value, and number 2, the existing share premium from that particular capital stock. Okay, so again, number 1, we need to cancel, the share premium. And number 2, we need to cancel the par value, and number 2, we need to cancel the share premium. Okay? Kumbaga, kung iisipin natin, cancel the original issue price, okay? Then recognize the existing issue price. Yun yung concept dyan. Okay? Dyan yung concept. Ginamit natin yung issue price kasi we need to cancel both the par and the share premium if there are any. Okay, if there are any. So, if the original, okay, issue price, okay, is lower than, okay, or if the original issue price is lower than the reissue, okay, than the reissue, meaning itong original issue price, ito yung from par to no par, okay? If it is lower, then we will recognize, okay, share premium. Okay? Kasi nga, kung iisipin natin, yung debit natin dito, which is equivalent to your par and the share premium, okay? Baliktad pala. Okay, sorry. If the original issue price is higher, okay, let me correct ha. If the original issue price is higher than your reissue price, then we have share premium. Okay, we have share premium. So, kumbaga, kung iisipin natin, mas malaki yung nasa debit side natin, okay, kaysa sa credit side, yung reissue price. Okay, sa credit side. So, that is why we have a difference to be charged to share premium. Okay? Example. Okay? So, let's say we have a capital stock or share capital at par of, let's say, 100, no? Then, 50,000 shares. Then, we have, for this particular issuance, we have a share premium. Okay, we have a share premium of, let's say, 500,000. So, di ba, 50,000 times 100, that is 5 million, obviously. Okay? Change from par to no par. So, let's say na this was canceled, ito. In exchange, we will issue share capital, okay? 50,000 shares having no par but with a stated value of, let's say, 50. Okay? O 50. So that means the total stated value natin dito, okay, the total stated value, that is 50,000 times 50. So that is 2,500,000. So anong mangyayari sa entry natin dito? We will debit, obviously, capital stock, yung with par. Okay, capital stock with par. At, again, always at par value, 5 million. Then, again, we will credit the share premium na 500,000. Kasi nga, these two forms the original issue price. Di ba? Then, we'll credit the new capital stock at stated value of 2,500. So, ito yung sinasabi natin na there is a difference. Mas mataas yung original issue price versus the new issue price. So, how are we going to treat the difference? That will be share premium of 3 million. Okay? So, that is the point, recapitalization. Now, if the scenario is different, now meaning yung reissue price is mas mataas kaysa original issue price. Okay, if the reissue is greater than the original issue price, obviously, hindi na yan siya share premium. Baliktad na nga, di ba? So, saan natin yan siya i-charge? Retained earnings. Okay? That will be charged to retained earnings. In this scenario, yung nangyayari lang dito is that there is recapitalization. No? There is recapitalization. So, that is from par to no par. Now, no par to par, actually same concept lang din yan siya, but this time, instead na yung original issue natin is with par value, no par value siya sa stated value. Then convert into par value. So same concept pa rin, pag mas mataas ito, okay, kaysa dito sa no par original issue natin, charge the loss, kumbaga, to retained earnings, capitalization. However, if the original issue is higher than the reissue, charge to premium. Okay? Charge to share premium. Same concept. Okay? Reduction of par or stated value, ito yung, kumbaga, babawasan yung par or stated value. So that means walang or no capital stock will be cancelled, but rather we are to effect reduction in the value. So obviously, in these two transaction, dalawang entry lang or isang general entry lang talaga ang mangyayari sa kanilang dalawa always. Kasi nga there is a reduction. And that entry basically, there is always a debit to capital stock. Okay? There is always a debit to capital stock. And the corresponding credit, kasi nga, nagbawas tayo, so saan mapupunta yung nabawas? That will be share premium. Okay? That will be share premium. Yan lang yung entry dyan. No? Reduction. Napakadali lang. Bawas, kung magkano yung nabawas natin na par, then credit always to share premium, no? So, example, no? Let's say we will go back to our existing example ito. Diba this is a par or a capital stock with par value, diba, no? Let's say na instead of 100 daw, let's say we will reduce it to 50 par value. So, reduction of par value. So, obviously, yung mababawas natin na amount dito, that is, or that will be computed as the reduced amount, which is 50, multiplied by the total number of shares na 50,000. So, obviously, that is 2,500,000. Diba? That is 2,500,000. Now, how are we going to recognize that? Debit, capital stock, then credit, share, premium at 2,500,000. So, plain and simple, ano? Very basic. So, next concept. So, the next concept that we are to tackle with is itong tinatawag natin na stock split or share split. Okay? Now, itong stock split or share split, this is a recapitalization wherein ang nangyayari dito is that there are no change in the value of the capital stock. Klaro yun siya, ha? There are no change in the value of the capital stock. However, as to volume, okay, or while there is no change in the value will be affected. So kumbaga, ang effect lang yan, sa total value, walang mangyayari, but as to sa number of shares, yun yung maapektuhan. Okay? So yung effect lang yan, it's either we will increase, okay, number of shares or decrease number of shares. To, no? That is stock split. So increase number of shares, ito yung split up. Decrease number of shares, ito yung split down. Okay? Again, always remember, basta pagdating sa stock split, yung value ng capital stock will not be affected. Okay? Will not be affected. Only the number of shares and the par value. Kaya, ang mangyayari dito, if there are stock split, no journal entry. What we will make is only memo describing the split transaction. No? Example. Okay? Let's say we have an existing number of shares na, let's say, existing shares natin, meron tayong 100,000 shares. Okay? At 100 par value. So, pag 100,000 times 100, meron tayong total capital stock value of 10 million. Okay? 10 million now. Let's say, meron nangyari na split up. And the split up stated na split up 2:1. Okay? Split up 2:1. So meaning, pag sinabing split up 2:1, for every 1 share, it will be converted into 2 shares. Okay? Split up 2:1. So, kumbaga, multiplied by 2. Okay? Multiplied by 2. So, mangyayari nito, from 100,000 shares, okay, from 100,000 shares, it will be converted now into 200,000 shares. Yung 100,000 shares natin, existing par value is 100, di ba? Okay? So let me just clarify the illustration na. So the number of shares, we have 100,000 and the par value, we have 100. So split up 2:1. So this will become 200,000. Total value nito is 10 million, di ba? Before the split up. Now, again, the total value will not be affected. So that means the total value should be 10 million also. Okay? Should be 10 million also. So ano yung mga apektuhan dito? Instead of 100 na yung magiging par value, okay? Ang mangyayari dyan, because 200,000 na yung number of shares natin after the split up, the par value will now become 10 million divided by 200,000. So that is 50. So see, what is affected is the number of shares from 100 to 200,000 and the par value of 100 to 50 pesos. That is split up. The total value would remain. Okay? Now, what if baliktad? Let's say split down ito. Sinabi split down 2:1. So, pag sinabing split down 2:1 or 1:2, no? Every 2 shares, okay, will be converted into 1 share. Okay? Every 2 share is converted into 1 share. So obviously, instead of multiplying, we will now divide. Okay? So, from 100,000, magiging, magkano to? Obviously, excuse, 50,000. But the total value would still remain. So, ano mangyayari sa par value? Klarong-klaro na magiging 200 pesos. No? So, again, if we are to compute that, 10 million divided by 50,000 to 200. So, that is the concept of split up and split down. Okay? So, that is stock split, no? Actually, itong concept ng stock split, if we are, pag nandito tayo sa intermediate accounting 2, no, hindi to siya actually medyo komplikado kasi we are the issuing entity. Okay? However, pagkabaliktaran nito, what if tayo yung stockholder, no, applied with the number of shares, affected yung costing na natin dito sa investment na account natin, which those type of topic or transactions are discussed with your investment topic sa intermediate accounting 1. Now, if you can remember that. Okay? So, last topic that we will discuss with this part 2 is itong tinatawag natin na rights issue or stock rights. Okay? Rights issue or stock rights. Now, what is this rights issue or stock rights? This rights issue, stock rights or share warrants, okay, share warrants, these are equity securities, okay, these are equity securities given to existing stockholders, okay, given to existing stockholders, enabling them or giving them the right or privilege to acquire first, okay? Acquire first prospective additional issuance of capital stock. Okay? Prospective additional capital stock. So, kumbaga, this is the exercise of the right for or the exercise of the preemptive rights of the existing stockholders. The concept is every time na may increase in capital stock kasi, no? And there is a prospective new issuances, yung binibigyan talaga ng unang right para bumili dyan is yung mga existing stockholders. Okay? To give them the privilege na ma-maintain yung existing capital interest. Diba? Yung composition ng capital interest. Sila dapat yung mauna para ma-maintain yung equity interest nila sa corporation. Okay? And sometimes, no, or most of the time, yung corporation, pag may mga ganitong transaction, nag-i-issue yan sila ng mga share warrants, stock rights, no, or rights issue. Para kung sino man yung holder nito, okay, sino yung holder ng share warrants, they have now the right, okay, they now have the right to purchase first, or they have the privilege for a special price sa stocks to be issued, no? So yun yung share warrants, yung right na binibigay for preemptive purchase. Okay? For preemptive purchase of capital stock. Okay? Now, actually, walang issue dito masyado kasi nga, itong mga rights, pag na-issue ito sa existing stockholder, okay? Pag in-issue ito, pag binigay, no? Memo entry lang to talaga siya, no? Memo entry lang. And then, pag na-expire, memo entry lang din. Okay? Memo entry. Pag in-exercise, meaning, ginamit talaga yung share warrants. Sige, i-exercise ko itong right ko, then I will purchase capital stock at this given price. Then, walang problema. Normal journal entry, pag mayroong regular issue of capital stock, that is debit, consideration received, either cash or non-cash asset, at the value of cash, or pag non-cash asset, the fair value of the consideration received, or the fair value of the stock, whichever is applicable, or par. Diba? Yun yung original na, or general concept natin, no? Typical entry of issuing capital stock lang pag may exercise of the share warrants. Pag issuance of the share warrants, memo entry, describe the transaction that there is a share warrants issued. Or if the share warrant is not exercised, then memo entry lang din. Describe that the share warrant is not exercised. Okay? Magiging komplikado lang to, kumbaga, if the share warrants, okay, if the share warrant is bundled, okay, bundled in the issuance of preference share. If you can remember this, we have already talked about this, no? We have already talked about this. Remember the concept of your compound financial instrument? How are we going to account for that? Okay? Compound financial instruments. Ito yun, no? That means we are to allocate the value of the preference share without the ex-warrants and the value of the ex-warrants. Kasi nga, yung issue price ng preference share, okay, or yung value ng preference share na in-issue or the consideration received, kailangan natin siya i-allocate kasi nga may naka-tie up siya na equity security portion. Diba? Compound financial instrument. No? Which we will not dig deeper na kasi nga we have already discussed that from our past discussion video. No? So, that is for this part 2. Okay, that is for this part 2, no? So, we will end this video at this point kasi medyo mahaba na siya. Almost 130 minutes na tayo. So, we will continue with part 3. So, we will now deal part 3 with retained earnings na. So, for retained earnings, we will have another set of discussion for exercises na para mas ma-apply natin yung concepts na natutunan. Okay? So, see you in the next discussion video.